I'm Judy Shaw for NYSE Floor Talk. Joining me today is Salim Ramji. He is the Global Head of iShares and Index Investments at BlackRock. Salim, it is wonderful to have you on the show. Thanks for joining me today.
Well, it's great to be here. And it was exciting to ring the bell 20 years after we launched our first bond ETF.
Amazing. What a milestone. What was it like to ring the bell, be up there on the podium?
It was exhilarating. It really was. It really was.
I'm glad you enjoyed it. Well, let me ask you now. So iShares launched the first four bond ETFs 20 years ago.
That's right.
Just how different do you believe things were then?
Well, 20 years ago, if you think just here on the stock exchange, we were in the middle of a revolution in equity trading. And the bond market 20 years ago was not that. That it took, often 5 phone calls to price a single bond. You couldn't price a basket of them. It was expensive to trade. And the first bond ETF really started a whole revolution, because now you could trade a basket of bonds. You could do it at a much cheaper price. You could do it on an exchange. And today, we now have hundreds of different iShares options in the bond market. And it's really gained this momentum because what it really started to do was break down barriers for every kind of investor to access the bond market and make it just as easy as it has been to access the equity market.
Okay, so now what is the AUM of the iShares Blonde ETF platform, and how do you think it compares to others in the industry? Do you believe that this industry is continuing to grow?
Yeah, I absolutely believe it's continuing to grow. I mean, if you think about so far this year, it's been one of the worst bond markets for 50 years. And if you think about our flows year to date, they're just north of $70 billion into iShares ETFs, which is twice our nearest competitor. And if you look at all the different use cases of individual investor clients or asset management clients or insurance clients, what's happening is that they're starting to use bond ETFs for so many different purposes beyond just the first purpose that we launched it for 20 years ago. They're using it in their portfolio, and they're using it as part of replacements for bonds themselves.
All right, now BlackRock recently came out with a prediction that global bond ETFs will hold $5 trillion in assets by 2030. What trends are you seeing that you believe that will make this happen?
Well, the really important thing is that today, the total bond ETF market is just shy of $2 trillion, but even that is less than 2% of the total bond market. And so over the next decade, we think that it can easily be 5% of the bond market, which is where we got the $5 trillion from. But when you look at all the different uses, what we're seeing is that bond ETFs are being used as instruments of active return. So they're being used by wealth management firms as they're building portfolios with more and more choices of bond ETFs. The thing that blows me away is that they're also used by 9 of the 10 largest active managers as part of their active investment process. And they're using bond ETFs because they're cheaper and more transparent and better ways to discover price in the bond market. And so the basis of our optimism is that we think that bond ETFs are being used as core parts of active management, whether it's in a portfolio or it's an active manager looking just to access the bond market more easily and more cheaply than they otherwise could before.
All right. Well, Salim, wonderful to have you on Floor Talk.
Well, thank you for having me here.
Thanks for
It's an
joining me
exciting
today.
day. Thanks.